as you all know, today, is a Sunday instead of normal Saturdays that we do. But I just want you to know that, there were reasons why I couldn't post it yesterday. This is our 25th learning session. So we've done a quarter century learning session so far. And so it's September 2020. Wow, numbers sound really good. Okay, now I know that most of us might have seen a bit of a struggle in this month of September. If you remember, August 31st, the market was at 11,784, almost 11,800. Then it went down, hit 11,200. Today it is at 11,500. And the market has been up and down. Banks have been very weak overall, and that's been a struggle for a lot of people who've been holding banks. Reliance shot up, and Reliance has been went from 20, I think 2070, it went to 2003, 370 even. So there have been outperformances there. The IT pack has did a huge run up. TCS, pharma stocks in the last 1 week have been on fire. Dr. Reddy's and a lot of pharma stocks have been going all over the place, including Apollo Hospital, for example. But I know that it has been a struggle for most people. But I want to show you something. Okay, this is surprising. Uh, Even though the market has been down, and I think the last time I showed this, my FNO positions, my hedge positions, they're sitting at about 0.95 loss, right? Today, as of now, this is what the position looks like. Okay, 17 trades, 11 successful so far. Some of them I haven't closed out, so those unsuccessful could turn out to be successful. But if you look at it, I am currently sitting at a profit of 1.76 lakhs, or almost 5%. But this is not the end of the story. If on September 24th, which is just 4 more days, Monday, Tuesday, Wednesday, Thursday, if the prices remain the same on all these shares, I would probably look at a profit of 2.7, almost 8%. Okay, now what's shocking about this? Out of the 17 trades, 13 of them will be successful. What's shocking about this is the market right now is from 11,784, it has gone to 11,504. That's almost a drop of 280 points, which is almost 2.37% decrease. So where you see the Nifty has reduced by 2.37%, and the Bank Nifty has gone down by almost 3,000 points, by the way, you can see that because of hedging, just because of hedging, my current profit is 5.2%. And if it all works out, 8%. And I can tell you why this is incredible, because if you look at, I don't have it on this presentation, but I'll show you later on in an example. A lot of the shares, the futures that I bought, are actually at lower prices than they were what I bought it at. Quite a few, not everything, but quite a few. And yet, because of hedging, those positions have become profitable. And I'll show you examples. Okay. So before we get into the Q&A part of this, but I want you to look at the market outlook. If you look at this, okay, this is the Nifty from last week. We had closed at 11,454. And this week we have actually, moved up a bit at 11,505. But you can see that the market has been basically consolidating. Okay, it hasn't gone above 11,600 with you can see this green candle, 11,600. That's about it. And the bottom has been about 11,200. So we've been sitting in this range. So I think for a breakout to happen, it has to cross 11,600 successfully and properly, and then break out, or it could just sit in this position. If there are any negative cues, okay, we had the Chinese India border tension. If something adverse happens there, then we could probably see the market go down a bit more. But overall, this has been the trend in the market, where it's kind of just sitting, just like that. We're not moving much. By the way, many people had questions of what happened on Friday, because on Friday, suddenly the Bank Nifty dropped by 500 points in about 5 minutes. And most of this was in HDFC Bank and Kotak. And the basic reason was both these banks, where there was a rejig in the FGSC, which is the foreign investors. They have a fund that denotes how much they would put into different shares, and they reduced the amount that they would be putting into HDFC and Kotak. And that's That's the reason why the banks all just shot down very quickly in those 5 minutes. But again, the Nifty recovered, the bank Nifty kind of recovered. Uh, Bank Nifty in fact closed at about 2263, which is it went down below 22,000, which was a shocking quick shock. But I think it was good that we saw the banks also recover a bit to close at 2263. But if you look at this was the previous week, okay, it was at 22,479, and this week is 2263. So the banks have not done well at all so far. And for the overall market to really go up a notch, the banks have to move. And I don't think that will happen until the moratorium case gets resolved on the 28th of September. What happens is most likely, I think, the ruling would probably come out in a bit of a good favor for the banks because nobody wants the banks to fail. There would be probably some adjustment, but at least it would be not adverse for them. In such a case, I can see the bank nifty starting to move up after the 28th. But until then, there's a lot of uncertainty. Uh, in fact, I had only one bank position in my entire portfolio last in my hedged futures and options portfolio, and even that I exited basically because I'm not really sure what's going FIIs, DIIs, basically the domestic investors have been selling throughout this month. Look at this, they've sold 5,000 crores, 5,600 crores for this entire month. They sold on Friday as well. But the foreign investors keep buying. Now, of course, when the Fed Reserve said the interest rates are going to remain almost zero in the US for the next 1 or 2 years, that means a lot more investment is going to flow into markets like India from foreign countries. But the domestic institutional investors have been selling mostly, and I just don't know when they're going to start buying. Okay, they've been selling in the whole of August and so far the whole of September without fail. And it has been the foreign investors who've been keeping the market buoyant, and of course retail investors. I think we underestimate retail investors. A lot of retail investors have invested also, and so, what is my general take on the market? For one thing, I really continue to believe that the market is bullish, but this next 1 week is probably a consolidation before a breakout. Why that is because of the cues. Okay, the global markets are kind of in a neutral position right now. We keep on seeing the U.S. markets continue to not break out again, but kind of middling ground. Probably they're also in a consolidation phase before the general elections, the presidential elections there in November, and so that's one cue there. And most Asian markets would tend to follow the U.S. markets as well. They're all kind of in a neutral position as well. We also tend to sometimes follow the U.S. market a lot, and so our positions have been more or less neutral as well. That's one side, the global side. The domestic side, we have the border tension, and that has to get resolved. Then for the bank side, we have the moratorium case issue in the Supreme Court, and that has to really get resolved first before we can see a decisive move in banks. That the bank nifty or the banks constitute 30% of the entire market. And so if 30% of the market is not moving or is continuing to be weak, the markets can go up. But overall, I see a lot of strength. Okay, good strength in IT, quite a good strength in auto, good strength in pharma. Metals are coming back up, and so even oil and gas. A lot of stocks that are non-bank or non-financial are moving up, and so there is a lot of good trends in the market as a whole. But I think at higher levels, we again seeing more and more sell-offs. Okay, people are booking profits at higher levels. And so this has been more or less a consolidation phase between 11,200 and 11,600 has been the range for us for quite a few days in September. So we're going to wait for a breakup. Okay, so that is basically my thought. My overall outlook for the month is that we're still in this consolidation, but uptrend move. We got to see some resolution on the moratorium case, some resolution with the border issue, and some global moves as well. Okay. Okay. Now I want to introduce again the high net worth plan. Okay, what you've seen what I showed you is where the markets have been falling and people have lost money also on the investments. You have seen, the hedged positions that I hold actually are sitting at 5% right now and probably 8% at the end of the month. And that is simply because of how I invest. I hedge a lot, but this is only open to people who probably have a high level of investment, and they have to be patient. For example, someone was telling me, I've been holding Sun Pharma from the beginning of the month. It went down, and he was saying, "Wow, you've been so patient. The entire month you've been holding that trade." And yes, I've been holding that trade, and it's not profitable. So we have to be patient. Don't be anxious. When it comes to hedging, you always hedge. If it's going to go, it's looking to go down, keep hedging. That's fine. Um, and so this is a really good way. No matter where the market goes, you probably end up gaining a good return when it comes to the high net worth plan. Now, what if you don't have time for all of this? Or what if you don't know how to do this properly? Well, I can tell you that there is another way. That's the partnership plan. And if you have, if you there's minimum entry of 1 lakh, but if you think that's something that you want to do, where you don't have time to invest at this level, uh, and you also still want to see a decent return even though the market is going up and down and very iffy. I think this is a very good plan partnership. You get a 12% return per annum, guaranteed, no loss of capital, and this compares to like 3% for savings banks, 5 6% now for FDs, maybe 8 to 9% in bonds and SRPs. Okay, and so those are things that, especially for people without time, no time to trade, no time to learn, but have capital lying around, a good plan for people to join up. Okay, now let's look at people who have asked a lot of questions. I had actually had quite a lot of questions. I couldn't put all of them in here, but I thought these questions were relevant. Okay, when does a normal day start for you? Okay, I get up very early in the morning, so I don't think that's a typical day for most people. Normally, I get up at 4 or 5 a.m. And then I usually start preparing for the market by maybe 6:37, because the SGX Nifty opens at about 6:30, and so I tend to watch what's happening in the global markets from that time, and not fully, but from time to time I just take a glance at it. Some of my work I do in the night time, especially between 10 to 11 before I head off to bed, where I look at what are potential stocks to watch out for the next day, what trends were broken, any trend lines that were, whether there's anything that's going on the up, something breaking down, what the US markets are looking like. Now, that's a very important thing. So that's how my normal day would look. Start basically, I get up very early, but my when it comes to the markets, I would probably start looking at them by 6:37. By 8:30, I'd send out the advisory. By 9, I'd be, by 8:30, I'd be ready for the market. Then by 9, we'll be on the market. Then 9 to 3:30, I would, unless I'm not available, I will be watching the market, trading, and that's my normal day when it comes to investments. What preparation? So this is again part of that question. What preparations do you do before the markets open? I keep a very good eye on what the global markets are doing. I prepare my watch list. I draw trend lines for the watch things on the watch list that I and set alerts so I know if they're going to break, and then I enter so I can take a position if I have to. And then I also listen to the news. I also listen to I watch data. I look at global data. I look at investment data, especially FII, DI data. I keep looking at it from time to time. I also, because I do futures and options, I also look at what are the option premiums, what's the volatility. So I look at Indian volatility index as well as the US volatility index. So a lot of things that I do uh, as preparation before the markets open. Okay. Now this past week and actually this entire month, okay, there have been so many ups and downs. And how do I know what news influenced the market to behave that way? Well, basically, a couple of things. One news that really hit the market was the China-India border. So you should look for geopolitical news that affects India and affect our Indian market. Second, the US markets going down, uh, and that global markets are a cue. Okay, when the US market starts selling off, we could also see a lot of profit booking on our side. If the US markets are going off on a tear, which it did in August and July, for example, then you would see all the other global markets kind of following that lead. Okay, so those are, I think, one is geopolitical local news. The other one is the global markets, and especially the US markets. Those are the two things that I think really influence the Indian market itself. Again, sometimes things, there are so many news that happen from time to time that affect, particular individual stocks. You can see how Reliance shot up after Silver Lake's investment came in. Huge rise in Reliance, for example. And that's a low, that's a, news that's affecting a particular stock. But if it's a huge stock like Reliance, you can expect what happens to the whole entire market. When yesterday the FTSE rejigged on Friday, when that news came out, HDFC Bank and Kotak Bank went down, uh, and so that's the same thing. When that news came in, it particularly affected HDFC Bank, which is a huge component of Bank Nifty and also the Nifty, and so that is why when HDFC Bank went down, market went down. Okay. So it depends. For example, if we take a small bank, like say Canara Bank, some news comes in Canara Bank alone will go down, the market may not go down. But if news comes in, say, Reliance, HDFC Bank, ICICI Bank, HDFC itself, or some of the heavyweights, ITC, HUL, Infosys, TCS, then that can move the market. Okay. So it's not just global cues and geopolitical news. Sometimes it's also news pertaining to a particular stock, which is a heavyweight in the market. Okay. How and when do you exit from F&O positions? Okay, now ideally, if I take a position, I try not to exit it, but I keep edging it. But just so you know, this month I have actually exited two. I exited Bharati Airtel and I exited Bajaj Financial Services. Why I did those two is by Bharati Airtel, it had crossed below a huge support level. So if the share goes below a huge support level, I will exit because I know that it is going to be difficult, or the share price is going to keep going down, and I cannot just keep hedging. And so, for example, I'll show you an example here. Okay, this is Bajaj Finserv. I bought it on 25th of August. Okay, so it's like a month ago, and look at the price I bought it at 6,530. Look at the price I exited out, 5,945. So if you look at that, that is a loss of how much? Almost 600 rupees, right? 600 rupees into 125, that's almost 73,000 rupees loss. And you're like, whoa, why did you keep holding on to this for so long? That is simply because I can hedge it. And if you see in Bajaj Finserv, over this last month, I've hedged it 1, 2, 3, 4, 5, 6 times. I've hedged it 6 times. 6 hedges, out of which 4 hedges, 3 hedges are still active. Okay, the 6,500 call, the 6,600 call, 6,700 call, all still active. And today, if you look at this, okay, if I go all the way back up, okay, if you look at this, Bajaj Finserv, I've made right now sitting on a profit of 1,037. Okay, Bajaj Finserv, when it went and if it closes at these prices on 24, I'll make a profit of 4,800. Okay, so let's keep that in context. Okay, even though Bajaj Finserv went down so much, 73,000 rupees, I'm actually on a profit of 1,000 plus right now. This is the power of hedging. Doesn't matter. Why did I exit out of Bajaj Finserv? Because once it crossed 5,970, the trend line looked really weak, and I knew that it was going to break down. Yesterday it went down to 5,850 even, and then it's now sitting at 5,900. I won't probably enter it again because I'm pretty sure it's not going to come back to 6,500. So I'm pretty sure all of this is going to be even money. 5,000 rupees is not bad return. It's not a great return on, but imagine even though the stock went down so much from 6,500 to 4,000, 5,900, that's 600 rupees loss per share, or which is almost 75,000 rupees loss for that trade. I'm actually going to end up with probably 1,000 to 4,000, 5,000 rupees profit. Similar story in Bharti Airtel. Okay, you look at Bharti Airtel. What happened in Bharti Airtel? I don't have the the full data, but look at Bharti Airtel. Bharti Airtel, actually I bought it at 530 something. It went to 550, 560 ish or so, and then it started crashing. It broke down its support at 507. When it broke down its support at 507, I exited the stock. And today, then it went to 460, 470. Today it's back at 494. But even though I exited the futures, I kept my hedge positions. And today, even though the future position was at a huge loss, almost 23 into 1,850, that's almost 45,000 rupees loss. I'm actually sitting on a profit, 12,000 rupees because of the hedges. And if it all works in my favor, come Thursday, that will jump to 25,000 rupees. Okay, so that's the power of hedging. Okay, so normally I don't exit out unless I see that the trend has really changed and there's no problem. Does it make sense to become part of KWC partnership or just trade by yourself? See, I want ideally people to trade by themselves. Okay, learn and trade. But what if you don't have time? Or what if you don't see? You're unable to. I know that people have made losses simply because they bought shares and the market is reacting, going down and volatile and keeps losing money sometimes. Uh, but if they want a guaranteed 1% return without any stress, no problems, then probably they should become part of KWC partnership. Or you can diversify, probably be part of partnership at the same time learn and trade by yourself. That's my answer there. A lot of people had this question. I tell them, hey, if you join KWC partnership, you get advisory and learning for free anyway. And so that makes a lot of sense. Okay. How do you handle tough months like this? The last tough month that I really had a struggle with was June. I think in June there was a huge crash, and again there was a border tension. It was a really tough month, in fact. But I saw the market change in the last week of June, and from there July, August were really good months. Now, what happens when we see a tough month? One, know when to book profits. Okay. If you don't remember, 11,800 when I saw the market correcting, I booked a lot of profit. I exited out a lot of my cash positions, uh, and I booked a lot of profit. Sometimes we don't know when to get up. Or sometimes we might get greedy for more. That's something that we got to figure out. Okay. Next, what if everything is going down? What do you do? Understand the overall trend of the market. If the market is overall looking bullish or it's going to go up eventually, then I should see this when the market is going down as a good investment opportunity. So that is how I make my entries, for example. In every stock that I enter, I look for a share that is beaten down and that looks a good share. Apollo Hospital, classic example, 1,600 to 1,640, 1,650 was a range for a long time. It broke out. I bought it at 1,690. Then it went down again to 1,600, and I didn't exit because I knew that that level is okay. And today it has gone up to 1,840, 830. So almost, quite a large chunk of profit. Hero Mode is another classic case. It went down, and then at about 2,940, I bought it. Now it's around 3,100. So again, I look for even even though the market has been tough, as long as you make your entries right and you can exit out well, you okay. Tough months don't really. It's just that it's harder. Okay, it's just that these tough months it's harder to make profit, but it's not impossible to make profit. You can see it. Even though the Nifty is down by 2.37%, my return for this month so far is about 5.2%, which is how is that possible?